Welcome to StockOdds Odds and End podcast. I'm Dave Singh here with Rob Friesen, getting ready for the week ahead. Good evening, Rob. How's everything?
Oh, busy weekend, of course, but here we are running a little bit into the late hours as we do this here today. So we still want to circle back at some point to getting this thing posted on a Saturday if we can, so people can review it ahead of the week. But anyway, we'll keep trying, right, Dave? We'll keep trying.
Well, we have a full week coming up, normal for a change.
Yeah, rather than these fragmented weeks. I mean, there's been too many of them recently, hasn't there? And it does throw people off. Yeah, I mean, a full week is really great, and you can get a lot more accomplished. And also, there's sort of less interruption with low volume or early closes or people taking off kind of thing. So that's good. We got a full week here. So let's get started on this. So we've got July 3rd to 7th sector performance, just reviewing what happened for the week here. So for the week, we see consumer cyclical came in, and it was a 4-day week. Tuesday was off. We had an early close on Monday. So, kind of what would you say, 3.5-day week? Well, yeah, kind of like that, right? But consumer cyclical on top. And I found this interesting, utilities and communications and real estate kind of even next. To see utilities stuck in there in the middle is kind of funny. Healthcare and basic materials down at the bottom. For the 1 day, energy really launched, and basic materials. And the reason for this combination here of energy and basic materials doing so well on Friday was the U.S. dollar pulled back a lot, and also we had some economic reports that suggested more of a continued theme here of a soft landing, which means the global economy might be doing fine, and there is obviously a need for energy. We also heard that the green fund in Europe was only 13% funded, and it's had about eight years now to get funding, and it's only about 13% funded. So maybe not so well in the green space, and maybe, just maybe, we might actually need oil. What do you think, Dave? You think we're going to need some oil? We also had low reserves, and we also have a bunch of interruptions. There's some fires and things like that. I don't know. There's a few things swirling around with this energy. Anything else you can think of here?
No, I think it's interesting that we're just pegged around 70 for so long now.
Right. Oh, the other one was the SPR. Some buying going to be starting in September, October for refilling the SPR. There's a long way to go, but I think they announced 6 million barrels or something to buy. So that's another catalyst. But anyway, we'll see if that's sustainable. It was amazing for 1 day. We'll see if it's sustainable. Technology taking a little bit of a pause on the weekly and the 1 day, but obviously had an amazing June. So let's move on here to the groups. You can see, again, this is broader market. This is just the sector spiders. So focusing on just the sector spiders, we see the discretionary up 1.01% and XLU up 1.04. I still have to chuckle at that. And those were the best performers for the week. On the downside, XLB, even though it had a great Friday, was still down for the week, 1.05%. And even though oil was great on Friday, for the week it was still fairly soft. So XLV healthcare taking it on the chin, down 1.81. Okay, moving on to the SPY and IWM daily. I wanted to point out what happened here. In June, we had this peak kind of set matching highs. We pulled back from that, tagged our moving average. This is the 20-day moving average, and popped back up with a gap into the 30th right here. And then we went into the next week with the Monday trading, a half day, and it was kind of an inside day there, really. Next day, also kind of stuck in that same range, and then Thursday, we gapped down and almost tagged the 20-day again and popped up from that. And then we gapped all the way. Well, we rallied. We didn't gap. We opened down, but we rallied all the way back up to fill the gap again and then pulled back at the end of the day. And just, I don't know, just comical, really. Volume was actually a little heavy on that Friday as well. So interesting set of circumstances. Let's gap. Let's fill the gap. Let's fill the gap again. And let's back down. So that's interesting. And I wanted to contrast that with, even though this is a longer time frame here, just where the IWM has been, because we've been looking to see if there could be a catalyst for growth. Small caps love growth. We've kind of heard some things with the ADP data that might suggest the private sector, and hiring, and there is growth prospects. Had a good day on Friday, and it was an interesting pattern coming off the lower Bollinger Band like that, with a hammer and then popping up and filling the gap as well. So IWM looking to see if it can perform. We've got some other slides that might reveal a little bit more information whether that's possible here, but historically it has done pretty good through the summer months. So we want to keep that in mind. Here's the IWM for mid-month seasonality, which starts on Thursday, and it's showing a really good potential for mid-month, but not so much for the month, right, Dave?
Mm-hmm. Correct.
So, not as good as the SPY for the month, but mid-month seasonality is the standout for IWM itself. So let's keep that in mind as we start this week here. We got a full week. Mid-month starts on Thursday. Of course, we're going to be also starting earnings season on Thursday. There's some things that come out. I don't think there's much before that. You can tell us in a bit here. What do you think of the cues here for mid-month seasonality, Dave?
Yeah, it's similar to the IWM, really robust, 1.54 versus 0.88 for the spider. So of the entire month, this is the biggest differential between the cues and the spider.
And what's difference here is that, it beats both the SPY and the IWM for the month. So that's got to be some mega cap drivers in there. Now, mega cap kind of took a little bit of a pause this week, but it was strong in June, and there might still be some legs to it. I would think that if there's that leadership, IWM would want to play ball and catch up and say, me too. So here's the mid-month seasonality for ETFs. So where the edge comes in, I mentioned this before, but just a reminder, the edge comes in if we see something that's favored starting on Thursday, and yet it's at a discount, Monday through Wednesday. If we can get some kind of a discount here prior to that window. So anything strike you as interesting?
No, it's like the Cathie Wood stocks, right? Like ARC KK. Even some of the individual symbols within it. It was like DocuSign, Shopify, Twilio. So all those old names from 2 years ago, right? That were super growthy companies. That seems to be the theme. And then short things like gold and oil.
Yeah. So we know oil's been soft except for Friday's rally.
Mm-hmm.
If it does have a few more days of premium, that could be good. In order to get the GDX, GLD, GDXJ, that's the junior miners, in order to get that a good short setup, we would have to have the dollar down, which causes those to rise in the next few days. If the dollar was to rally, those might be discounted and then they wouldn't be a good setup. But if, let's say, the dollar pulls back and those can rally a little bit up to Wednesday, then it makes perfect sense to look at that from the short side.
Mm-hmm.
I find there's a lot of merit to seasonality, and of course, some of the event-based days, like the third Friday of the month, or the first trading day of the month, or the last trading of the month, can have more substance to them. You can sink your teeth into it a little bit more. With mid-month seasonality, because it covers from the 9th to the 14th business day of the month, depends whether it's broken up by a weekend. It depends whether how the market is on the 7th and 8th trading day before that window starts. It doesn't always have the same impact across all the days. It's probably more front end loaded the 9th, 10th, and 11th business day. So there's a little bit more variability in sort of context to trading the mid-month seasonality. But what I'm looking for is if the dollar pulls back in the next few days and launches some of these commodity stocks and ETFs up, then there could be a good setup into Thursday. The same would be true with the stuff on the long side if there's any discount there. And there might be, with maybe it could be some banking, could be some semiconductors. They haven't been as strong. Could be even the ARC could be down a bit, right? So
yeah.
Anyway, and down here, this is the universe based on these sliders of volume, price, and events. I would keep the events the way they are, keep the price. You can go down to $5 stocks if you want, but it's the volume that's going to change the symbol count the most. But of the symbols that you see, 104 of them, 86% are bullish. So it is a positive expectation for mid-month seasonality. And that's even in spite of earnings season and stuff. This is historically what we find. Okay, this is the stocks themselves. Anything jump out at you there, Dave?
No, just once again, it was I call them the Cathie Wood stocks, right?
Yeah.
The ARC stuff.
So yeah, I mean, we have a risk on stuff here on this side, more so. And then of course here we have some more defensive. We have oil and we have gold, and that would be a good theme, like my American Barrick, Newmont, Vale Oil, EOG, BP, Conoco, Hess. I mean, some of these here again, if the dollar is softer, those could rally ahead of this window. So keep that in mind. And that's what you want to try to line up. You want to find a weak group and what are the best stocks within that weak group to focus on. That's where the edge is, especially if they've been at a premium prior to that window. Okay. So that we'll leave it at that. Why don't you just cover a little bit of the economic reports and the earnings, and then I'll just go into close with the futures, okay?
Yeah. So Monday we have wholesale inventories and some Fed speak. There's a couple Fed vice chairs speaking and a Cleveland Fed president speaking. So that always can move the market. And then Tuesday, there's an optimism index. Wednesday, consumer price index, core CPI, so inflation data, and also some more Fed speak. Richmond Fed President Barkin and some others. And the Fed beige book is going to be released at 2 p.m. Eastern. So market usually is a little bit kind of just muddles around before that, and then come 2 p.m. we get some movement. And then Thursday, jobless claims, core PPI, so inflation data is again. And then Friday, import prices, consumer sentiment. So nothing major, but Wednesday there's that Fed beige book release. That's probably the most eventful thing. And then we have some earnings. Let's see, Monday, there's nothing much. Price Smart, WD-40. Tuesday, nothing eventful. Wednesday as well. But then Thursday, we have Pepsi and Delta Airlines. And then Friday is the important one, JP Morgan. That usually starts off the earnings season for banks. So that'll be interesting, as well as Citigroup, BlackRock, United Health, Wells Fargo, and State Street. So more earnings come Thursday, Friday, but I think beige book on Wednesday is probably the most significant event.
Okay, good. All right. Got on my screen the Dow Jones index futures here. We got them down 95 points, 0.28. You can see this was the reversal on Friday, and we really sold off, and it even broke below its pre-market for the Dow Jones. But anyway, you can see this follow through here since the futures opened at 6 p.m. Eastern time. And so we are down. Let's take a look at this S&P 500. Same thing. You can see the matching. It sold all the way back to its pre-market low on Friday, but now it's again down lower. 18 and a 3/4 points, 0.42%. Let's look at the NASDAQ. Again, more risk on here. In what we tend to look at the NASDAQ as more risk on than the Dow Jones, but it's indicating that it's not happy. I don't think anybody's really happy with that reversal that we had, because seasonality for Friday was supposed to be bullish, and it was, but then it gave it all back, starting just before 2 p.m. It gave it all back plus, and now we're even lower than that. So not a good showing there. And here's the Russell, which hasn't given back as much. So Russell is being a little bit more bullish than the other ones. Looking at energy, see what crude is doing. West Texas, it's hanging in there. So it's down a little bit, but it's hanging in there. Let's go to metals, gold here. And it's pulled back a little bit, but again, still elevated. And finally, the currencies, what is US dollar doing? So this was the Friday sell-off, and we've risen a bit here, but nothing dramatic. It does almost appear that it could roll over and be a bit softer by the time the market opens. So we'll have to keep an eye on that. Anyway, hope that helps. We'll let you guys go. And thanks, Dave, for your time. Appreciate it.